Welcome back. You're joining us on Market Pulse. It's time to take a look at all the action in the currency markets, and Saloni's been tracking that for us today. Saloni.
Sunanda, it's trading strong at about 60.70 to a dollar, and Forex dealers have indicated that rupee will strengthen further. But if you see the dollar cues largely on the back of the US markets recovering, the dollar indices also is about 81.61 against its rival. So that's also trading strong, and we're seeing some demand, especially for the greenback among exporters. As far as the levels for rupees concerned, it will be about 60.80 to 61.25 to a dollar. As far as the rupee factors are concerned, key drivers to watch out for will be the Ukraine-Russia conflict and which way the crude oil prices go from here onwards. Remember, last week we saw a lot of pressure on the currency market because the government has also announced a trimmed borrowing calendar. We are seeing a cutback in the borrowing plan which will ease the supply in the money market, so that will reduce some sort of pressure on the rupee, while the call money rate is hovering more above the RBI repo rate, so that will bring in some pressures. It's about 8.5 to 9%. We are currently joined by Abhishek Goenka, and he'll take us through his perspective on which way he sees the rupee panning out. Abhishek, to get a perspective on the levels as far as rupee is concerned, the pressure that you're seeing, we're seeing some sort of strengthening and flat levels as far as the rupee is concerned. What is your take on this?
Well, we expect the market to depreciate a little bit, 60 half, 60, 70 levels. These levels are good support to buy. So I guess the importers were kind of kept positions open because of the huge rally that we saw close to around 61 half. I think it's good levels to start buying. I think exporters need not panic. I think we should see levels above 61 once again.
All right, but especially the call money rate, we are seeing pressure building up on that. It's about 9%, 8.5%, 9%. Do you see pressure building up, especially on that market? Because bankers access that market very often.
That's right. There is pressure in this market, but then definitely, we have to look at other factors also. Just not the local factors, but internationally, if you look at the US data, it's just come extremely nice. It's showing that the GDP is improving and the expectations are building up for the hike of the rates in the international markets in the US. And if you look at the US at one end, which is expected to hike rates next year, and if you look at the other countries like the Europe and Japan, where they are having divergent interest rates. So in fact, at one end, we are going to see rate hikes. In case of Europe or Japan, we don't see any rate hikes. In fact, the dollar index is likely to get stronger. So I think this is again a momentum that needs to be looked at. Plus, though the tensions in Russia have kind of mellowed down, but this will keep going up and down in the days to come. So geopolitical tensions, the strength in the US dollar index, euro coming down, those things also play a very, very important role. Of course, the local factors which you're mentioning might play a little short-term role. That's the reason I'm looking at medium-term target of 62 levels in the US dollar.
Thank you so much, Abhishek, for talking to us. So, Sunanda and Priyank, this was Abhishek Goenka. Clearly, the key takeaway is that he's seeing a rupee to appreciate, and the level, of course, is about 60.5.
All right, Saloni, thanks for that. We'll take a break. On the other side,